Welcome to today's report, the 26th of February 2025. Right. Today I want to talk a bit about the Bybit hack, the ripple effects on Bitcoin and market sentiment, right? Now, cryptocurrency prices took a sharp dive on Friday last week, erasing early gains amidst reports of a potential security incident involving Bybit, a major crypto exchange. Now, the hack saw 1.5 billion US dollars worth of crypto assets flow out, which caused Bitcoin to drop to near 88,000 from a previous high of 99,482. Ethereum followed suit, slipping nearly 19% to fall to 2,310. Now, this sudden downturn resulted in the liquidation of approximately 100 million US dollars worth of leveraged positions, mainly longs that were betting on rising prices. Blockchain analytics firm Arkham Intelligence has linked the hack to North Korea's Lazarus Group, making this incident the largest crypto theft in history, surpassing the 611 million US dollars stolen from Poly Network in 2021. Now, according to Bybit's CEO, Benzo, the hacker took control of an Ethereum core wallet, transferring all of its funds to an identified address, right? Now, despite this, Zhou reassured the market that Bybit remains solvent, with assets well exceeding the 1.5 billion losses. He also confirmed that the company has processed over 350,000 withdrawals requests, swiftly restoring normal operations. Now, in the aftermath of the hack, analysts pointed out that the stolen Ethereum could exert significant buying pressure, as no over-the-counter desk or exchange had the liquidity to absorb such a large amount. Now, this shortage in liquidity could drive up Ether's price, right? However, reports later surfaced that Bybit had managed to recover over 50% of the stolen Ether, with most of the transactions taking place through OTC desks, which seem to have sufficient liquidity to handle the demand. With the news of this recovery, ETH dropped to 2,313 at the time of writing, and Bitcoin to 88,191. Now, this hacking incident follows a string of other negative news for the crypto markets, including the DeepSeek market dump, the Trump tariff announcement, and the Libra rug pull, right? So we have been inundated with all this bad news. Now, with these setbacks accumulating, the question arises, are we entering a crypto winter, especially with Bitcoin now trading below 91,000, or is this merely a market consolidation? Now, looking ahead, the Bybit hack occurred on February 21st, right? And just the following day, USDC, which is a stable coin, printed a staggering 800 million, okay? To be exact, 800,944,639, far exceeding its typical range of 121 million to 162 million. In fact, the total USDC printed in February reached 3.77 billion, along with 126.93 million in USDT. This unusual printing suggests that major players may be positioning themselves for entry, especially in the light of the Bybit hack. Okay. Now, since December, the market has been relatively range-bound, with a total 23 billion 932,837,895 stable coins printed between December and February. Now, this include USDT of 6.3 billion, USDC 17.3 billion, and the European stablecoin or at 209 million. Now, this significant increase in printing is a signal that large players are gearing up for potential market action. Now, historically, similar increases in printing during the periods of consolidation, such as between March and November last year, were followed by notable price surges in Bitcoin from a low of 48,955 to a high of 109,699. So, with the current level of printing activity, the market could see a similar outcome once the fear, uncertainty, and doubt, better known as FUD, among investors subsides. Okay, so this is what we're seeing. So I just have to wait. Now, do take note that from right now until April the 1st, right, we will have news coming out, the tariff news coming out, from Trump. Now, if Trump is able to navigate all of this well, okay, if the market sense that say, now Trump has already said that, he's going to implement the tariffs on Canada and Mexico, but if it is a watered down tariff, the market could rise from there. Now, early on, I've mentioned that, wait for late February into March, around this time, March, we could see a recovery in the market. I expect it to come down, which the market, the S&P 500 and Nasdaq and the Dow, they are more or less consolidating, coming down, right? After that, we could see a recovery. Okay, there's a possibility over there if and only if the news with regards to the Trump tariffs is more of a watered down version than the previously expected. Okay, so that's the report for today.